All right, good morning to all of you guys. This is KEL 25 CRAZII Market Talk with KEL. Be crazy with CRAZII. All right. Now, this morning you can hear that my voice itself is a bit crooked because this few days I've been very busy because my wife is not in Singapore. So it's like I'm basically handling up, down, everything myself, kind of tired out. Okay. All right. So disclaimer apply as usual. Please understand this. Do your risk management accordingly. And after that, in the second session, we talk about the 16th of June market, which is DEX. So we're going to show you how you can trade DEX in the market. All right. Now, we'll today have a Super Tuesday. I will confirm later because I need to. And now my dad happened to be awarded now. So it's like, oh, really packed schedule. So I will be a bit swamped today. Let's see how it goes. Yeah. Thank you very much. Okay, so let's start this morning session by going through what happened last night. Now, the Dow Jones lost. The Dow Jones up by 300 points on the cooling oil. Oil have came down, and also the Israel-Iran conflict. All right, by now you should know that basically Israel has a very strong upper hand at the current level now, and Iran has already, in a way, some reports say that they are calling for help. Some say that they are now winning. This sort of things all going on. But the thing is this, of course, no war is a good thing, all right? No war is a good thing, but it just feel that the end, so it's not the end yet. That's how I felt that way, okay? But of course, I can be wrong. Okay, so the thing is this, now people are optimistic. They felt that the Israel and Iran war will contain. That's why the oil price has reduced after that. We'll cover oil later. And the thing is this, we can also see that right now, right? Iran reportedly asked several countries, including Saudi Arabia, to urge Donald Trump to put pressure on Israel for an immediate ceasefire. Okay. Citing that a Middle East diplomat with knowledge of the especially came from a diplomat, yeah. All right. So the ceasefire will be in exchange for Iran flexibility on nuclear talk. Okay. So the market is now taking comfort of this, and hopefully things can be settled. Okay. So this one is all the Iran thing. So Israel claimed that they have superior aerial superiority over Iran. That's the reason why. And of course, previously there's this quote I saw on the internet. This Mao Zedong ever said this before, is that if you want to win the battle, you must contain two things. You must have the aerial superiority, and you also have the internal inside superiority. So the thing is this, I saw one on the video, it's incredible, is how they get the drone fire missile to an apartment through the window of a bedroom and killed the enemy inside there, so-called, but without affecting the entire building. Oh my goodness, it's like zoom, fly in, boom, get the guy out, that's it, but the building's still intact. That is really incredible, yeah? Technology according to that point itself. But more important thing is that there is a weaker than expected manufacturing survey data that came out, and yet the market didn't really bother much, yeah? Interesting. So our more this coming Wednesday will be the non-farm, it's the FOMC meeting, which is expected to have zero change. And of course, everyone will be looking at what this Jerome Powell will be saying during his interview with the journalist later. So if he actually says that they might be looking for a potential interest rate reduction, then of course the market will spike up, yeah? But at the same time, if they say that Jerome Powell insists that he doesn't see the reason, which I think he will do that too, then of course the market may actually take as a negative point. Okay, so take note of that, yeah? Now, while they are saying that everything is good, contained, and market went up, right? But Donald Trump leaving the G7 early, that's interesting. All right. So not too sure he leave because he need to attend the situation, or he leave because there's a worry, not too sure, yeah? But nonetheless itself, right, he feels that, okay, things is going to be interesting here. Okay. And the thing is this, we can see that the very important thing I told you guys about the bond market. Look at the bond price right now. The bond actually collapsed yesterday. So the 10-year yield didn't move much, right? The 10-year yield, but the bond price came off down by almost 1%, is down by 1%, in fact, 1.01%. So why the bond price comes down? So there's only one reason, because the market really don't feel comfortable with US anymore. So that is the main reason, because you look at the US dollar as a guide, the US dollar itself, right, is trying its best to fight alongside the 97.75 support level. Yesterday, it touched again and then rebounded. So all this speaks for itself that the market actually internally is having some trouble. So that's the reason why you can see now the Dow Jones itself, right, is still, excuse me, is still fighting around the moving average, the SMA 200. I'm still pretty confident that we'll see a 3% pullback, about 1,200 points from where we are right now. Okay, it means that the Dow should see about 41,200 to 300 as support level. Now, it's not because I'm adamant I want to sell, but you can actually feel that the whole economy is not doing well. I'll do an MAO video very soon. It's regards about the total number of S&P counters that are now staying below their 200-day moving average. I repeat, yes, staying below. Usually in a bull market itself, right, you should be above the 200 MA, then that equivalent to the S&P 500. But we can see that the S&P 500 right now is actually near the high, the all-time high, very near. It's not too far away, but yet up to 40% of the S&P shares are now trading below the 200-day moving average, which means that most of them now are actually trading somewhere around here. Oops, okay, wrong color. Around here. So while the S&P now is above the 200-day MA, but 40% or more of the shares are trading below the 200-day moving average. So what does it tell you? That means that the S&P is being propped up by a few counters, which we know is a magnificent seven. So when this sort of thing happens and stuff, right, it's actually not a good sign. Okay, but again, there's no reason to call for a sell yet, because you can see the market is still pushing up as much as it can. But of course, it really depending how high will it go the next round. Okay, so we'll cover that later. Yeah. Okay, so with that, we have covered the macro picture. Let's go into this micro picture, which is the market today. Okay. So let's take a look right now on the micro picture on the gold market. Okay, so the thing is this, yesterday we have a very interesting move around. The gold yesterday opens at a high and then trade all the way down to the low. Oh my God, okay? But if you notice this, it covered perfectly the chocolate bar very nicely. So that's why I tell you I love my chocolate bar very much. Okay, now today the opening price is at 33.86 and the MLP is 34.19. So actually MLP is on top of us, yeah? So by right itself, right, the market pivot 2 is 34.18. So which means that the MLP and the pivot 2 are stacked together. So if there's going to be any prop up in the market will be going for these numbers, 3418 to 3419. But for the gold price to stay above 3400 itself, right, seemingly it's a chore for now. You can see that the market tried to go above it, but just couldn't go much. Okay, my point is simple. Follow the OP. If the market wants to sell today, no matter what you tell me, it's a sell. Vice versa, if the market today want to buy, you stay above OP. Don't need to look at the market too much. Nowadays, the market is no longer the same like previously, whereby there is follow-through buying or follow-through selling. Today can buy, tomorrow can sell, tomorrow can buy, tomorrow can sell. It doesn't care anymore. The market just wants to play on their own game. So follow the OP rule will make your life much easier. That's the first thing to take note of. Right, so today, if gold can stay up, we will see the same thing, the stack I told you. But if gold breaks below OP, right, then there will be some serious selling. And I think that will come all the way to 33.55 region, yeah? So I repeat myself, if gold price do break below OP, right, there is a possibility to see gold coming down to 3355 region, because that is the KCL as of now. All clear? If all clear, press number 1 right now. Okay, a friend of mine asked me this question last night. He said, "KEL, what makes you so confident in the gold price?" Okay, I give you the most simple way to let you know why am I confident in gold through the most what they call most conventional way, most conventional way, so that you can understand where am I coming from. Okay, hold on, yeah, where is it? Okay, so I bring gold right now. Okay, so this is gold price. Okay, you can see that using the very simple RSI as a form of a guide. Yeah. Okay. So you can see that gold has a very strong base at 50. Now RSI at 50 means the market is very bullish. Okay. Because normally in a bear, I mean, it's a normal condition or bearish condition, the market going to RSI 30 is usually the case. But you can see ever since this point here until now, the gold price has been going up. All right. And if you look carefully, it's every time when the gold price hits the 50 marker, you can see that the gold price is actually generally higher. Can you see that? Okay. So because of that itself, right, this is a very bullish signal, very bullish. Yeah. So the thing is this, I would love to hope and see that the gold can come down again and then the RSI come to 50, then I will be able to buy again. But the thing is this, we just saw it happen recently, right? So that's why I don't think we'll see in the near term. Yeah, that's my personal view on the gold, and that's why I'm so bullish on this. Okay, pretty simple, right? So of course, if you can use the same concept now and you put it on, let's say crude oil, then you'll see my point. Yeah, give me a moment. I'll take a picture of here myself. Okay, so if I put in crude oil into the picture, let's take a look. Okay, wow, a lot of lines. Hold on, let me clear this. Okay. Right, you can see that for crude oil, it doesn't stay at the 50 zone, but then you can notice that this what happened is that now it's staying at the here, and the price are now higher. So compared to the what they call the bottom to bottom point, you can see that the low got higher. Now things got higher, so that's why you have the ballistic upside. So now the thing is this: the only dampener now is that the top here itself, right? This is a common top. This is a common top. And the two common top tells me that the price, of course, is lower. So by right itself, this is actually a sell signal. That's why the market pulls back last 2 days. Yeah. But the thing is this, after this happened, if the market do pull back a little bit back to 50, all right, and then the price come down maybe somewhere around here, and you can see that the 50 zone price are here. Now the 50 zone price is even higher. This become a very strong buy signal. And after that, if it goes up again, and if the market now goes higher than the previous high, that means the start of the bull is definitely coming for the crude oil market. Okay? Can you understand this? If you understand this, press number 2. If you're like, huh, what are you talking about? Then it's okay, no worry. It's out. You can join the PTP class and I'll explain more in detail on how to use the right way to do charting. Now, the way I chart stock the way I chart the market and the way the conventional way is very different because I use common points. I use things that's always very consistent. I don't like today see this, tomorrow I do that. No, I make sure that whatever I say today can be repeated and it can be passed down to you guys. Okay. Oh, thank you. There's some of you who understand that. Very good. Okay. Now we look at the Dow Jones for that. Okay. So now this is the Dow Jones, and this is where it's still why the Dow is still holding up. Okay, so you can see one thing for sure is that the common point for the RSI at the below 30 is lowering. So actually, this is a negative point. That means that by right, the Dow Jones, if it come down, will come down to here easily again. Okay, that's first thing first. Number 2, now you notice that the RSI is all holding at the 50 marker. So we bring it up. We bring it up. We bring it up. So the market is still bullish. That's why the market cannot come down. Okay, the market may pull down one day, but next day recover, pull down one day, next day recover. So how can we change the dynamic of this, right? That means that the market, the next time it goes up and then it come back down to the 50 zone, the thing must show a lower cycle low. Now, if that really happened, that means that it's a start of the potential downward trend in the market. Okay, so that's thing you must take note itself, yeah. And of course, at the same side itself, you can also see that the market is still trying by pushing higher. Okay, so now that is where I'm gonna get on something very important. Everyone, take a look. Now, this is the Dow Jones over the last, how many days? Let me take a look. From here until here, it's about 32 days. So this is a 32-day range. So you do the 32-day range, we put Fibo over here. Now you can see that the market basically has stopped at 61.8 and the market now is kind of resisted at the 23.6. So if the Dow Jones do break below, this is where it should be supported at the 61.8. But if the market really close below, then we should see some selling coming in. So that's why now you can see the market, although it's trying to push itself higher, but we can see that for 32 trading days, the market really didn't move much. And you can see that every time it's trying to push around. Okay. Now, one thing to note, guys, for today is this. Okay, let me just take out this guy first. Hold on. I want you to take a look at this one here. You can see that the market here, we have a black candle day. then we have a white candle day, then we have white candle day, and then we have black candle day. So today likelihood to be a black candle day. And if it's a black candle, most likely you'll cover the KCB over here. All right, the KCB for today itself is at 42,034. Okay, so write it down. 42,034. So I suspect that later on, there's a good chance that the Dow Jones will be going down to this level for today. Okay, all clear? If all clear, press number 3 right now. All right, so that is the market doing a bullish or bearish, and that is for gold. Let's look at the Dow. That's what we are talking about. Let's bring it in. Right, Dow Jones today also have a very interesting thing. The opening price is 42,540. The MLP is 42,280. Now, what is happening here is very interesting. You can see that the two moving average here, the MA30 and MA200 are all stacked very close by. Although not very close, 70 points different, but it's good enough, 70 points. And then we have the MLP, which is here, and then we have pivot here as well. So in short, today market, we got MA lah, MLP, and pivot one, all the support level of the market. But if the Dow Jones keep on pressing it down, right, then we know that the market likely will come down already. Because you can see, based on the triangle chart thing itself, the market is supposed to continue to go higher, but it didn't, it breaks down. And even the boys are buying, and yet the market is still pressing down. So that means that someone is actually selling the market very quietly, and it's something big going to happen. So with this ongoing, with the bond market right now doing not so good, I am quite confident that we will see the KCB done, which is here already at 42,034 I just mentioned earlier. So guys, this song is something that I want you to take a look. But of course, to keep it vital point, it has to break below pivot 1 first, then the selling can really kick in. All right, all clear? If all clear, press the next number 4 right now. Okay, all right. Now, the next thing I'll share with you is crude oil. Let's take a look at crude oil. Okay, crude oil, as you can see right here, guys, the crude oil opening price is $71, right? And then MLP is $73.76. So the question is this. Yesterday, crude oil opened higher and then trade lower, right? Okay, understand, because the Iran thing started to dwell down. Then why is it now going up again? Hey? There's nothing here, right? There's no firing now. I check my screen. There's no firing on the Israel or Iran thingy. Why the oil price is going up by itself? Interesting, right? And now it's trying to toggle the MLP. So if it breaks the MLP, it will go up to 75.20 again. So guys, I'm feeling something is just amiss over here itself, because the boys are still buying, the retail are still buying. And the thing is, this is supposed to be like, talk down already. Then why is the oil price going up? It's not little, no. $71 to $73 itself is quite a fair bit, $2 already for an Asia market. So I don't like what it's saying here itself. So I think you should be very careful, especially now the Dow Jones is actually moving down below 42,300 already. So all these things, you just have to see that from your open eye. You know that something is wrong over here. So guys, be very careful. I suspect that the oil can go all the way to my target of $78.93. Okay. I believe that will happen. Now, of course, for that to happen, right, there very high chance because the ongoing war will continue to explode. But I say again, something is there. I mean, you always see this sort of thing as well, right? When war, there'll be a first wave, there's always a second wave. And always a second wave is a bigger wave than the first wave itself. So if the first wave already creates such a damage here, the second wave should be like that. Okay, that's my personal opinion. Yeah, I hope that don't happen. We don't want casualty, but the prices are not showing me the same thing. Okay, all clear? If all clear, press number 5 right now. Okay, so this is a Canadian dollar, and I continue to say this Canadian dollar will continue to go down. I already say that Canadian will continue to go down, and you can see from the chart, it is very highly, it's going to cover all the way to this point here, which is the somewhere, let me see, it should be somewhere around 1.34 level, 1.34. All right, you can see that ever since the color turns to red, KSI turns to red, KCX turns to blue, there's no way it can go up. And what is very scary is this, okay? I want to show you something very important. For those actually in the market with me, this is my personal favorite. I told you guys I love this, right? The price goes up, but the KSI stays red, so the market sell. Boom, 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 right? So people say, I don't believe this, it's just only by luck. Okay, explain this again. Oh, yeah. Then explain this again. You see, again, it happened. You understand my point? So I love to trade things like this because it's a very sure win trade. It's like when the prices are going up itself, but the KSI stays red and the market is actually on the red color candle. I tell you, the chance of going down is very, very high. That's why I like to trade like this out market itself. Yeah, I like it very, very much. Just like when the market was coming down this way, but then when the KSI turns green, the market will go back up again. You see, it's always same thing here itself. So trading is not difficult. It's actually we make it very difficult for ourselves. Yep. So just have to, get opportunity like this and trade together. Okay. All right. So that will be the next market, number 6 for us. If you can do that, that'd be excellent. All right, guys, that will be all for this morning session. All right, hope you learned something today and prepare yourself for market condition. We'll go have a short break and then we'll come back to talk about the DAX. Okay, thank you very much.